This will be the only video you need to watch to understand the latest earnings report from Evolution AB, the Q3 report for 2025 for Evolution AB. They just reported earnings. The stock is down as I'm speaking. So in this video, I have prepared a lot of things for you. And I have done some work, some financial engineering work. We'll look at some charts, some graph, and together we will listen to the earnings call and you will have my live reaction. I didn't spoil myself. I just want to listen to the earnings call with you guys. So I think it will be a pretty long video. And honestly, I was not sure to make this video or not, because I sold my Evolution AB in Q1 when things turned south for this company. But I've been a shareholder for a while, so I've been following the story since then. And I just wanted to make this video. I decided to help other people that are investors in Evolution AB and are struggling to understand the situation, because a lot of things are happening at the same time for this company. So I understand for a lot of retail investors, it's kind of hard to understand is this the bottom or not? Is it a good quality company that you buy? Is this the bottom for this company? Or is this just a falling knife? So I'm making this video for this person that has followed me and that still didn't sell, that is still holding this Evolution AB and is struggling right now because the stock is not rebounding. Full disclosure, I think I sold during the Q1 here after the drop, and I bought other US stocks that went up in the meantime. So for the moment, for the short-term basis, it was a smart decision, but it's too early to tell if this was smart or not. Maybe the stock rebounds from here. So in this video, I want to give you a lot of information, and I'm sure you will like it. I'm sure you will like it. I have never seen this kind of analysis for Evolution AB, and I think this will be the most complete video about Evolution AB. Okay, in case this is your first video from this channel, welcome. My name is Christophe Noor. I'm French. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And the goal with this YouTube channel is to help you become a better investor, is to follow quality names that are on a drawdown, and you can buy wonderful companies at a fair price. So is Evolution AB a wonderful company at a fair price? This is what we are going to see. Okay, in case you don't follow this company much, just so you know, I've made plenty of videos about Evolution AB on my channel, and I still have my Google Sheet from Q1, the latest video I made about Evolution AB. And I just want to let you know my notes about Q1, and if it turned out that these notes were relevant, or did the company improve a little bit. So I will just go through the Q1, then we'll talk about the report, and we'll do some financial analysis, because I've seen no one do this on YouTube or Twitter. I think I'm the first one. Okay, so what did I say in Q1? These were the financials for the company. You had very little growth. You have like 3% growth, 4% growth for Evolution AB. Let me remind you, Evolution AB is in a gambling market, and historically speaking, look at this. The revenue is supposed to be up and to the right and growing 20-30% per year. Same thing for the net income. It has a track record of growing meaningfully. Same thing for the free cash flow. It has a track record of growing double digits, okay? And in Q1 for 2025, they had a lot of problems and the growth decelerated to 4%. But at the same time, the costs went up. The expenses went up by 15%. So you don't grow that much, but your costs grow a lot, which means your operating profits, your EBIT goes down, your profits go down, you pay more taxes, so your net margins is going down, the profit is going down. So they are a little bit saving the face here because of all the buybacks they are doing. Anyway, earnings per share is flat, minus 1%. Let me talk about the track record of the company. This is a company that was famous for growing minimum 20% per year, and now they are declining a little bit. If you look at the geographical markets at the time, this is what I said. I mean, you can check on my channel. There is a video here. In Europe, they don't grow at all. In Asia, they don't grow at all. The only markets that are growing are North America, but this is a much smaller market. Look at this, 70 million euros of revenue coming from North America compared to 200 for Europe, 200 for Asia. So this is a small market. Yes, it is growing, but you start from a low base, so it doesn't impact much your total revenue. Latin America is growing, but it's even a smaller segment, and other like Africa, smaller segment. Okay, so this is what I said. These were the financial highlights. No growth, bad. You have a 4% dividend yield, 4% buyback yield. So maybe this is a value play right now. I said they are proactively pulling back some gray areas to focus on regulated markets. Actually, if you don't know this, their biggest market at the time was Asia. When you have Europe and Asia, Asia was unregulated. So you could have fat margins in Asia. And now they are having problems in Asia. They are being cyber attacked. People are streaming their games anyway. People are stealing their content. And it's been the case for a few quarters now. And the management team says publicly, yes, we are experiencing problems. We are having cyber attacks, but they don't provide any solutions for us shareholders. I mean, we are shareholders. I mean, I was a shareholder, so a partner of the company. And the CEO, the risk financial officer, is not telling us any solutions. And even today, in Q3, they continue to say, we are attacked, but we don't provide any solutions. This is a red flag, actually. So they are being attacked on their big market. And at the same time, the European market is not growing because of more regulatory measures. So you are being attacked in your biggest market. And in your second biggest market, you don't grow because of more regulation. And more regulation means lower margins. So your two cash cows are being attacked, which is the reason why Evolution AB is not growing anymore. The company continues to, this is what they said. More regulated revenue. What they said in Q1 was, the company continues to prioritize growth over short-term margin preservation. And now, if you look at Q3, let me make a transition to Q3 now. Now, they said they were prioritizing growth. Growth is not here. They are declining. They said, yeah, we want to prioritize growth over margin preservation. And now in Q3, today, they say we want to prioritize margin compared to growth. The mindset has shifted. And if you are not following the story like I am following for Evolution AB, you are not aware of this. So the tone of the management is changing, meaning the management is changing their focus. What does it tell you about a growth company? So one quarter, they tell you, yeah, we are still a growth company after all. You wait 2 quarters and they are in panic mode. They are not growing anymore. And they do anything they can to preserve their margins. Spoiler alert, they fired people. Yeah, it is not something you want to see for a growth company, to shift your focus from growth to margins. And how do you do this? You fire people. Yeah, this is something you do for a value play. I can totally understand this for many retailers in the US. They are doing this for a focus on margins and earnings per share. But seems like the tone of the management has changed. Q2 is expected to feel the impact on adjustments. However, management is confident H2 would show stronger performance with new studios and games ramp up. Well, they disappointed today. So another sign, can you really believe management team over the short term? Over the long term, no worries. The management team is great. But over the short term, seems like they underappreciated the difficulties they would have. I'm not telling you that they are liars or etc. No, they do a great job. I'm just telling you, be careful about what the management says publicly. And if you don't note and remember what they have said in the past, you will not be able to see if they are correct for next time, okay? So, the CEO at the time in Q1 said, focus remains on growth, superior to margin, well. They didn't age well, and still aiming to widen the gap with competitors, which is true. I said I don't believe their guidance. It is similar to Meta. In 2022, for Meta, we knew what impacted the declining growth for Meta. For Evolution, I said they have a huge backlog, many games, many players, many new markets, and they still don't grow. So what are the solutions the management team is providing us shareholders to show us that they can grow again? Well, it seems like they are continuing to struggle. Okay, and these were some risks I highlighted for 2024, some risk for 2025. And what did I say at the beginning of the year? I said I expect decreasing margins because of regulation. Spoiler, it is the case. I expected slow, regulated markets. Spoiler, it is the case. I expected continued cyber attacks. Spoiler, it is the case. If you don't believe me, you can check my video that I did for Q1. It's public. I said no Asian growth, which is a high margin market. Spoiler, it is the case. And you have a concentration for top 5. Spoiler, nothing has happened. Nothing has changed here. Okay, so now that you know what was the case for me selling Evolution AB in Q1, what has happened since? We are in Q3, and this is the report. So, should I start with this, or should I start with the presentation? Maybe the presentation, so I don't spoil you all the fun. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. Okay, let me talk about the presentation, the slides, and then we'll talk about the commentary from the CEO, etc. I'm telling you, this is the only video you need to watch to just understand the situation about Evolution. If you like this format, please let me know in the comment section below. Leave a like, subscribe, do whatever you want. Become a member to this channel to have exclusive members only live sessions. Do whatever you want, but I need some water before. Okay, so Q3, highlights of the quarter, net revenue decreased by 2%. You have live growth of -3% and RNG growth of 4%. EBITDA margin is going down. Negative and volatile development in Asia. They are still not happy with Asia, their Asian market. Let me remind you, that's their cash cow, their most important market. Growth in Europe following full effects of ring fencing. Many new dedicated environment in USA, in Canada, launch of new games, new slots, opening studios in Philippines and Brazil. Okay. In Europe, you have what is called the ring fencing. It is a famous name that everybody learned in 2025. Basically, you have new regulated markets in Europe. Some markets that were unregulated became regulated. So the government wants to know more. You have to be more in the white market, and it will lower your margins. You will have more taxes, etc. So it's a pain in the neck for Evolution, and they were very cooperative with the administrations. Evolution clearly said, okay, we are happy to shift from unregulated to regulated. We are happy. We will decrease our margins. We will communicate more. But they did that a little bit too far, and the CEO of Evolution said maybe we were a little bit too far in this cooperativeness, because now we are not growing anymore. So yes, we are now in regulated markets, but we don't grow anymore. So for our shareholders, it's not the best. KPIs, headcount. Look at this, the headcount, the employees number going down. Games round index, all games going down a little bit. I will elaborate on this a little bit more. Regional update for Europe and Asia. Look at this. This is the revenue for Europe. Revenue is a negative growth of 6% year over year. Don't worry, we'll talk about the geographical split before. I have done the work for you. But positive Q1. Remember this, because in the commentary from the CEO, they say, we are happy to grow again in Europe. Yes, I mean, you are growing quarter over quarter by 1%, but on a year-over-year basis, you are still declining. So please check the tone of the management and the words that are being used. Full quarter effect from ring fencing. Yeah, this is full regulation mode now. Resource mix optimization ongoing. Not sure of this. No news for the UK Gambling Commission. If you are a recent Evolution shareholder, you don't know this, but a couple of months ago, like 6 months ago, they were attacked by the UK Commission, the UK regulators, saying they don't trust Evolution to be in a regulated market, etc. The UK revenue is only 3% of the revenue for Evolution AB, but it's about reputation, right? It's about your brand. If you are attacked by a regulator, it's not good at all. And spoiler, it is still not resolved. So you still have a big question mark when it comes to this commission. Maybe this commission will be dragged on later. And now for Asia, so their cash cow declining. Revenue corresponds to a negative growth of 6% and negative minus 9%. Continued issues with cybercrime. This is what I told you. I mean, it's been so many months of being attacked with the criminals in Asia. People are stealing your content and they have no solutions. Maybe they will have to live with this new environment of being attacked. But it seems like they have no solutions to show. Challenging regional regulatory dynamics, like in the Philippines, for example, or India. New studios in the Philippines off a good start. Okay, let me scroll down a little bit. You will see you will get much more information for the commentary from the CEO. And then North America, very good. Latin America, very good. Okay, but these are small markets, so we don't care much. This is for the future, right? For the next 5 years, North America will be important, but now it's just a small market. Financial development, regulated revenue. We are at all-time highs when it comes to regulated revenue. Regulated revenues went from, sorry if that's small, that's maybe too small, you can't see. It went from 44% to 46% of the revenues that came from regulated markets. Profitability is going down, obviously. Let me scroll down. Profit and loss. I will show you that later. Operating cash flows, capital expenditure. What you can see is this line. In the past, they expected the CapEx, operational capital expenditures, to be 140 million euros. And they said this line, previously communicated full year expectation of the CapEx, 140 million euros, likely on the high side. So I'm expecting less than 140 million euros for Q4. If you reduce your CapEx, you increase your free cash flow. So maybe they want to save face once again, and they don't invest in much cost. Seems like in the past, their priority was growth. Seems like now their priority is growth, margins, free cash flow, squeezing all the juice they can. The focus of the company has completely changed. They don't have debt. They are filled with cash, so this is safe. And outlook and capital allocation. They continue to maintain their outlook for margins. Well, now we know how. Asia remains volatile, so they expect bad stuff from Asia still. And the capex forecast is still the same. Dividend policy, minimum 50%. This is a Swedish company, so they will never cut the dividend. Even if the stock drops meaningfully and becomes extremely cheap, it's a Swedish company. It's part of their culture to pay 50% of their profits as dividends. So unfortunately for us equity investors that we like flexibility, we like buybacks, they will not do this. I would love for them to just cut the dividends and focus on buybacks. Anyway, these were for the slides. Now let me show you the report. You will have more information. This is where you get all the meat. Okay, now we know events during the third quarter of 2025. Cost control. I mean, guys, remember in Q1 they clearly said twice that their focus was on growth and growth and growth. Now the first line they say about events is about cost control. Yeah, okay. Cost control and good leverage from investment generates a positive effect on margin development. Literally, their first line is about margins. 2 quarters ago, they said we will prioritize growth compared to margins. So can you really trust what the management says in the short term? Open-ended question for you. They launched a live casino brand. Everything is happening. Everything is good in North America, actually. I track all the numbers, the number of players, games from states to states. Things are good in North America. They are doing great things in America. Expansion of the RNG portfolio with new games. Okay. Events after the reporting period. Playtech unmasked as a client behind defamatory smear campaign targeting Evolution. I told you, many things are happening at the same time here. So I hope you are still following. I don't know how long this video is so far, but this is only the beginning. So a couple of years ago, 2021, you had a new campaign from an Israeli company called Black Cube that accused Evolution of targeting unlawful countries, illegal countries where it's illegal to gamble. And the report was harmful to their reputation. The report was long and dragged down for years and years and years. And finally, a couple of days ago, we found out that the company behind this Black Cube company was Playtech. Playtech is another company in the gambling area, Playtech stock. And literally their biggest competitor attacked Evolution. And when it was really revealed that it was Playtech behind everything, defamatory, it's not cool, it's not professional, it's not ethical at all, the stock dropped 30%. Now it rebounded a little bit, but it's about brand. The Playtech brand has been damaged these days. Damaged a lot. And it is extremely bullish for Evolution. To have your biggest competitor trying to kill you for 4 years. Wow. I mean, and now everything is known and they will have a lawsuit and they will have to pay Evolution AB for all the damages they've done. So it is in the gambling industry. So maybe it's very difficult to forecast what is the amount of dollars they will have to pay because it's a niche market. It's a sin market. It's a sin industry. It's in the gambling industry. So maybe it will be peanuts. Maybe it will be in the millions, maybe 1 billion euros. Nobody knows. And actually, I don't know at all because it's such a difficult industry. I know the lawsuits in this industry. Very difficult. I mean, you can cheat very easily, let me say this. So yeah, very hard for their competitor, very bad sentiment. And now seems like Evolution has unmasked them and they will get some money out of this lawsuit, which is bullish. First sign I wanted to see out of this report is a positive comment from the CEO about this report, this lawsuit. I would love, for example, for the CEO of Evolution to say, yes, we have unmasked Playtech and we expect the lawsuit to generate a meaningful fine for us, which will be very beneficial for our earnings in 2026, or we are very positive in the outlook. Seems like I have not seen anything like this. They are very neutral. Maybe that's the Swedish culture. Maybe they are not allowed to say anything because that's a lawsuit and that's about law. But yeah. Okay, let me scroll down. This is what is important here. Let me talk about the CEO comments and then we'll talk about the numbers. I think you will love this part. Okay, CEO comments. For the third quarter, we reported a small decrease in revenue. Revenue growth at constant currency is estimated to be 3%. As I have pointed out before, we have not been satisfied with the growth so far this year, and that sentiment has not changed this year. However, a difference compared to the first half of the year is that performance in Europe, North America, and Latin America is decent to good. Let me show you the performance in Europe. Europe, for the Q3, on a year-over-year basis, Europe is down 6%. But as I told you before, they are very happy because on a quarter-over-quarter basis, we are up 1%. I would not call this decent. I would not call this good. I would call this neutral. I mean, you are down and now you are not rebounding at all. This is neutral. This is not decent and not good. Unfortunately, revenue development in Asia is still very far from satisfactory. True. We will continue to fight the cyber criminality that has affected our business there for too long. True. And during the quarter, we didn't progress as much as we would have wanted. Basically, the CEO says, we don't know what to do for our Asian market. They just don't know what to do. Or maybe they are being too humble, but I think they just don't know what to do. It's been too long, too many quarters. Shareholders have been suffering too bad for too long with this Asian market. The fight is a constant balancing act between taking countermeasures that are too stringent, which creates issues for legitimate end users, and too light, which don't yield the desired effects. During the third quarter, we overextended our countermeasures and our revenue was affected negatively. It's a very difficult job to be the CEO of Evolution. Either you fight back too hard but your revenue slows down, or you let things go loose a little bit but you are being attacked. So it's very difficult. I don't know what they can do actually. And this paragraph is a sign that the cybersecurity industry is a very bullish industry in the future. Also a sign why I recently invested in Fortinet, a cybersecurity company in the US that I think is one of the best buys you can have right now. The stock has dropped and the fundamentals are just amazing. Another sign that in the age of AI and digital world, cyber defense will be more and more and more important. But it is not a video about this, it is a video about Evolution AB, so let me come back to what is important. Asia is also affected by the newly regulated markets, Philippines. I mean, come on, every market is being regulated. It's too much drama for this company, too much risk for this company. They are having a very difficult job, so good luck to them. Asia is also affected by the newly regulated market, Philippines, which initially has been a very volatile, as well as other markets such as, for example, India, that in our view show signs of moving towards regulation. Another country that goes to the regulated market. If you go to a regulated market, margins will continue to go down. Maybe they have become too big, creating a higher level of uncertainty than before. More and more problems that are piling up. Despite the volatility, our newly opened studio in the Philippines has been off to a great start, showcasing commitment to the region. Great. Turning to a clear positive. Europe is back to growth quarter on quarter. You know what I think about this one. In the second quarter, we saw the full effects from our ring fencing measures, which provided a new baseline to grow from. In Q2, they said that they were done with the regulation ring fencing, so they can start from a new base. Seems like it is kind of working. They are growing a little bit, but they are growing 1%. Let me remind you, Evolution has a track record of growing 30% per year. So growing 1% is not an absolute victory. I can say this. Despite a summer without any major sports events, we saw good momentum in the more major regulated markets. Okay, North America is perfect. I mean, congrats. This is great. They are doing great work in North America. Nothing to say here. I love what they are doing in America. Very bullish for the long term, actually. Very, very bullish in the long term, the North American segment. Following a slower than expected start to the year, growth in Latin America is great. New Brazil, yes, they are continuing to expand in North America and South America, Latin America. Things are good. Despite a material revenue shortfall in Asia, we have increased our EBITDA margin in the quarter thanks to the progress in the rest of the world combined with a disciplined approach to our cost base. What they want to say, let me spoil you the fun a little bit. What they want to say is here. They reduced the net headcount by a whopping 600 in a quarter to save the margin look. So here is a chart from Ali here. Please follow this person on Twitter. This is one of the best accounts you can follow. If you're not following him, please do so if you are interested in evolution. Look at this. He provides great information. I think he has created this. And this is the headcount increase versus the margin. What you can see here is since 2021, if that's positive, that means they are hiring more headcount increases, right? And now it's their biggest decrease ever, I think. So on a quarterly basis, they fired a lot of people and they are very proud of this. They say, well, yeah, we have a good margin. Yeah, I mean, you fired a lot of people. You don't have to pay the salaries. That's pure margin management here. So Yeah, I like what he says here. We will always prioritize growth and take market share over margin, with the emoji that is not good. So yeah, be careful what they say in the short term. You never know where it can go. So the management says we are very happy with the margin. Yeah, no kidding. You just fire people. Spoiler alert, they can continue to fire some people to just maintain their guidance when it comes to margins. Maybe they will do this in Q4. We are now within our full year estimate of 66-68% EBITDA margin, and we expect to stay in this range for the fourth quarter. I'm strongly forecasting if the revenue growth is not good in Q4, they will fire more people. This will be my bet. In live, so live market and energy market. So live market, we report a 3% decline year on year, which is held back by the development in Asia. Look at this. For the first time ever, our RNG, so random number generated games, the RNG offering is outperforming live in terms of growth, live casino games in terms of growth. A great achievement from our slots studios, primarily No Limit City, which did very well in the quarter. I can read that twice, but I don't think I need to. They are very proud to have their energy segment that is finally outperforming their live segment. And Ali is also talking about this. Look at this. European performance, a clear positive. Interpreting Evol's result as a great achievement from the energy. Look at this. This is the growth rate for the live casino in blue and the RNG segment in orange. For the past few years, the RNG segment has not been growing that much, between 0 and 8% max. So it's not that the RNG segment is growing and outperforming everybody. It's the live casino that is dropping like a rock. Look at this. In 2 years ago, 2023, the live casino segment was growing 20% per year. And now it is declining minus 3%. So I'm not sure about the tone of the management team, but I would not call this, we are proud to finally see outperformance compared to other markets. It's not a sign of success. It's a sign of decline from the live casino. So yeah, it's okay for the CEO to be a cheerleader for the company, but the remarks are heading into the direction of salesmanship. Yeah, that's another yellow flag if you want my opinion. I mean, I would love, if you look at other Swedish companies, sometimes they are very blunt. If you look at Technion, for example, it's another Swedish company. They are, how can I say it? Insulting themselves, blaming themselves, throwing rocks at themselves when they do a bad job. So they are a little bit harsh on themselves, but I like to see this. I like when the management is honest and harsh. They say when they make a mistake, and they say, yeah, we screwed up, but we make everything we can to turn things around. Seems like Evolution is not doing this. Evolution is saying, we are proud to finally see this orange line superior than the blue line. This is not a good sign for shareholders, for the tone of the management team. I don't know if they will continue in the future, but I don't like to see this. We expect to have new games, blah, blah, blah. We have continued to deliver on the full year roadmap with new games. It's strange. They have so many games, but the revenue is not growing. Within Live, during the third quarter, we launched the great game. We have new games. By the way, for the ICE event, I think it's in Barcelona or Madrid. I think Barcelona. For this conference, the ICE, the studio of Evolution, their shop in the conference, is nearby Playtech. Now that we know there were the guys behind the lawsuit, behind the attack, it will be a good ambience, good atmosphere, good feeling. The two are together. So yeah, very strange moment for them. As there are currently a lot of regulatory movements across our markets, I would like to take the opportunity to explain Evolution's general approach to regulation. This is good. I mean, you have to be honest with your shareholders. This is good what they are saying. Our market leadership is not only dependent on having the most innovative products and the best talent, but it is also dependent on our robust compliance framework. It is true, over the past decade, Evolution has been very cooperative with authorities. So kudos to them. This is a great sign. This is a green flag. If you want to be the leader in online casino, online gambling, and you want to be the leader for 20 years, you have to be okay partnering up with countries. And Evolution understand this, and this is an absolute green flag. I am not making this video just to show you what is bad. I'm also here to show you what they are doing good, and they are clearly thinking for the long term. Yes, they have short-term issues, but the long-term mindset they have is great. They want to be cooperative. They will suffer in the short term, but Playtech is dead. The other companies are too small. You have only Evolution that can be the leader for the next 10 years in the online casino market. So you want to be compliant. And they are doing great things, being very cooperative with authorities, with countries. This is very smart from them. We always want to do what is right, and we do that by closely following legal developments, collaborating with regulatory experts, and adapting accordingly. In a sense, our goal is to stay ahead of regulatory developments, and we want to maximize the business potential. Yeah, it's just that they have a lot of problems right now, and we don't know if these problems will be solved next year, in 2 years, in 3 years. This is it. This is the uncertainty. Let's take sweepstakes in the US as a good example. We offer sweepstakes in states where it is not prohibited or where there are no legal uncertainties based on our regular dialogue with the regulators and policymakers. If conditions change, we will change. Okay, 4 years ago, this is important, a defamatory and false report on Evolution was published and disseminated that caused substantial harm to the companies and its shareholders. It is true. As the result of a lengthy legal process to identify the source of its report, we now know that Playtech, a competitor of ours, the biggest competitor, paid Black Cube, a controversial intelligence firm, to produce the report. At Evolution, we will always go to all lengths to protect our company, our brand, our colleagues, and our shareholders. This is a green flag. This is great. They want to preserve their culture. They will not do anything that will harm their reputation. This is great. Whether it is our efforts to fight cyber criminals in Asia, the resolution of the Georgian strike. Well, who remembers the Georgian strikes? It was a problem of 2024. They didn't manage employees correctly, and you had major strikes in Georgia. The bad thing is most of their employees came from Georgia, the country in Europe, not the state in the US. So it was meaningful, but the salaries were cheap, and you had a good amount of employees there. So they had to fire people in Georgia and open up new studios in Romania or other countries with the cheaper labor market, I would say. So yeah, it was an issue at the time, and now it's no longer an issue. All the action we are taking against Playtech and their associates who sought to harm Evolution. Sorry for my French accent, guys. I know I'm not used to reading a lot publicly like this. We will deploy whatever time, effort, and money necessary to defend our firm and its exciting future. We are dedicated to setting a strong course of the company. Blah 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 blah. We continue to be the best. By now, you know the Evolution spirit. We never shy away from a challenge. We continue to focus on expression. Blah, 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 blah. We are very happy in the long term. Okay, now you have a lot of things that were said during this report. Again, sorry for my broken French accent. This is life. I want to scroll down. And now I want to show you the Google Sheet. By the way, if you like this format, please leave a like. I want to show you the financials of this company because this is very complex and you have many headwinds at the same time, and the tone of the management has shifted from growth to now margins. So I have created this Google Sheet. Normally you see well. Let me zoom in maybe. All right, this is good. Year-over-year change. I don't care about the quarter-over-quarter change. I'm here to see the full big picture. You have two segments. Revenue for live casino games. This is the biggest market, as you can see here, 400 million euros. And the RNG, random number generation games. So, for the live segment, decline of 3%. it was a segment that was growing 20% per year in the past. And the energy, 4% growth. And they are very proud to say, for the first time ever, our energy offering outperformed. Great achievement. I disagree completely with this statement, as I said before. So the net revenue is down 2%. They also say at constant currency, the revenue growth was 3-4%, which is great. You want the constant currency growth rate to be decent, and this is the case for Evolution AB. So currency is a headwind for them. It is not that good, but we never know. The CEO, we have not been satisfied with the growth so far this year. And if you only look at this line, you have a revenue growth rate that is -2%. But next year, people don't care about this line. But you had an other operating revenue line. Let me show you what I mean. Revenue line. Where is it? Here. Okay. Other operating revenues. People ask, what is that? I don't remember this. Why is the earnings expected to go down? Why is the forward PE ratio expected to go up? People don't care about this. And I have seen nobody on YouTube or Twitter talking about this line. This line, 59 million euros, is a bonus that the company had last year. It's an acquisition they've made. How can I explain this? Evolution has made an acquisition in the past. And when you make an acquisition, you pay upfront a little bit of cash, let's say half, and you want incentives for the acquired company to work nicely. So you give them incentives. If you perform this amount of revenue, I will give you more money. So you have targets, year 1, year 2, year 3. So bonuses. And last year, so for this quarter, Q3 2024, they reduced the bonus of the targets. Meaning, we are lowering our targets, we are lowering the bonus we will give to the acquired company. And at the time, I made a video about this one, it was 1 year ago, if you care to scroll through my YouTube channel. I made a video saying either it's nothing or it's a sign that the acquisition is not working properly. And if the acquisition is not working properly, they know they will not have to pay the bonuses. So they are lowering the targets. And it creates this extraordinary revenue growth. Because if you don't pay your acquired company their bonus targets, if you're not confident they will reach their target, so you say, let me reduce the bonus, we will not pay you to give you incentives. It was expected to be a cost. It's a cost because you pay the acquired company to congratulate them on good results. If you don't pay them, you don't have a cost, you reduce your cost. And accounting-wise, it's very strange, but if you reduce your costs, you increase your revenue at the same time. So how do you account for this? Well, Evolution explained an extraordinary revenue item for quarter of last year. So if you take into account this extraordinary measure, the revenue is down 12%. And this is what you can see on Twitter right now. If you 12%, which means the earnings per share is down 20%. Okay, this is what is highlighted on Twitter. You had headlines in the Swedish markets, press releases talking about minus 20% growth. Okay, if you don't take into account this special event and you put 0, because that's a accounting trick, right? If you put 0 here, the revenue growth rate is not minus 12%, it's minus 2%. And the earnings per share decline is not 20%, but it's minus 3%. Okay, that changes a lot. And I only see people on Twitter saying the earnings per share is down minus 20%, but they don't talk about this. I mean, this is pretty important. You go from minus 20% to minus 3%. This is pretty important. So let me continue taking into account this. So you have a growth rate for revenue of minus 12%, but the real revenue is minus 2%. At the same time, what about the costs? As I said before, when I scroll up for Q1, I said this is for Q1, okay, so 6 months ago. I said the revenue was up 4%, but the costs were up 15%. So now let's see, 6 months after this, in Q3, The revenue is down minus 2%, and the costs are up 5%. So personnel expenses up 6%, D&A impairments up 12%, and all the operating expenses flat, which means operating expenses are up. Revenue is down, costs are up. This is not good for your margins. So if you take into account this, you have an operating profit that is down minus 22%, and your EBIT margin is down from 65% to 58%. This is pretty bad. This is the first time we have such a big decline in margins for Evolution AB. We are below 60%. This is quite bad. If you don't take into account the earnout here, you have an EBIT margin that is still going down. If you remove this one-time effect of revenue, operating profits are still down minus 7%. So it's still bad, right? And the EBIT margin is going from 61 to 58. You lose 3 points. Okay, let me continue. Financial items. I suppose they have a bond portfolio for the cash. Look at this. If you look at the cash balance, they are filled with cash. They don't have any debt. They have a lot of cash, and they own bonds in this balance sheet. So they generate some cash out of this balance sheet. And in this quarter, it generated almost nothing. Okay. So what about the taxes? On a year-over-year change, the tax rate increased. In Q3 last year, the tax rate was changing, but not in full force. Again, if you are new to Evolution AB, you will learn a lot in this video. A few years ago, and many years ago, Evolution benefited from a treaty in Malta, and they were only having a tax rate of 7-8%, these kind of things. In 2024, this tax rate regime changed from Malta, and instead of having like 7% tax rate, they are now forced to have 15% tax rate. And at the time, in Q3, it was a transition quarter, so the tax rate was on the way up, and now it is stabilized at 15%. So you are not helped by this impact in tax rates. So taxes are still going up here. So you have operating profits minus 2%, more taxes in percentage terms, which means the profits for the period are down 23%. And the net margins are down meaningfully. So you go from a net margin of 56% to 49%. A big decline. That's what, 7% change? 7% change in 1 year is big. And they did a little bit of buybacks on a year-over-year basis, like they bought back 3 or 4% of their shares, which means earnings per share decline of 20%. Okay, now if I remove this one-time change, because I just want to look at the core operations, what do we have? Core operations, okay? Revenue still down 2%. Operating expenses still up. The costs are still up. They can say whatever they want about margin expansion, cost management. Yeah, I mean, your cost management is instead of growing your expenses by 15%, you grow your expenses by 5%. You are still growing your costs. So yes, but not completely. The operating profits are down 7%. The margins are down. The profits before taxes are down 7%. The tax rate is still improving. So the profits for the period is minus 6%. Margins are down. And they did some buybacks. So if you only look at the core operations, the earnings per share are only down 3%. I have seen no one talk about this on YouTube or Twitter. And this is crazy. I mean, look at the financial statements. Okay, so Evolution was seen as a growth company in the past because it was growing 20, 30, 40% per year at very high margins and paying a dividend, and they deserved a higher multiple. Now, the story is not the same. Their two biggest markets are not growing anymore. The margins are going down. The growth rate is 0. It's minus 3%, but let me put 0. So the company is not growing. What is the good multiple? What is the good PE ratio for this company? It's a good question. If the company is not turning this ship and they don't have any growth for this year, next year, they didn't provide any guidance for next year, by the way. So maybe they're not that confident for next year. If they don't grow for 1 year, 2 years, 3 years, what is a good PE ratio for this business? For a cash cow that is not growing, maybe a PE ratio of 10. Now the PE ratio for this business is what? 12. So it is maybe not cheap. Now there is another scenario where they rebound in 2026. They finally fix this cyber criminality in Asia, and Europe is fine again. In this moment, the valuation can go up. Yes. Okay, so let me put this, and let me talk about the geographical split. Because you've seen what they've said. They're very proud of growing in Europe again. Europe, down, minus 6% year over year. Asia, down, minus 6%. North America, growing 14%. Very good. LATAM, growing 6%. Other, 8%. This is good. This is good. Next point, I want to show you this thread from Ali that has done some great works. I already started to show you some stats, but every quarter he's doing one of the best analysis you can find on Evolution AB. He says disappointing results. Evolution has, I already showed you this. Evo seems to have capitulated to an outlook of slow growth. Evidence number 1, they fired people to sustain their margin. Evidence number 2, they said European segment was a clear positive. Well, if you look at this slide, I agree to disagree here. This is not a clear positive. You are declining, and then you stabilize at 1% growth. Maybe you want to wait a little bit of a rebound before calling the turnaround, okay? Because regulation will continue in Europe. Next point, interpreted Evo's results as a great achievement from the energy. Yeah, I just told you this. It's not an outperformance, it's a decline from the blue line, okay? It's okay, blah, blah, blah. Let me continue. The sharp drop in Asia has been the killer blow to the biggest revenue decline in Evo's history. Look at this. Since 2018, you had an exponential growth revenue coming from the Asian market. And this was an unregulated market, so very, very high margins. And for the past year and a half, no growth whatsoever. And now for this quarter, strong decline. Is this the beginning of the decline? Is this a small decline and then it will rebound? That's the big question that all the Evolution shareholders are asking. And from what I see, the management is not that confident they can fix their cyber attacks. So, as long as they don't fix their cyber attacks, the Asian revenue will not grow. My opinion is we will wait a couple of quarters before having the answer. I think it will stabilize or not grow. Maybe I'm wrong, maybe it will grow again. I'm not a genius here. I don't have a crystal ball. But as long as they don't give us the solutions, like what they are doing to defend themselves, I don't see any signs of reversal. Let me continue. A few positives from Evo. The North American segment is saying growth as 22%. Well, I have a different number. I have a growth rate for American segment of 14%. Maybe I'm wrong. Maybe we have different data. Anyway, North America is growing. Latin America, Africa growing. Maybe he's talking about USD and I'm talking about the SEK, the Swedish krona. So anyway, the figures don't change the story at all. North America is growing nicely. Latin America growing nicely. Africa growing nicely. The RNG is slightly better than expected. A record high percentage of sales from regulated markets. As I told you, 46% instead of 44%. Okay, and that is expected to be a clean revenue. Evo footnotes are delivering the goods as always. Okay, the Galaxy Gaming closing, so it's an acquisition they have announced a couple of months ago, pushed from H2 to Q4. So they will continue to have this uncertainty with the integration of their acquisition. The UK Commission review to be concluded before the year end with unknown results. That's maybe not a positive, that's a question mark. Maybe it can be good and the UK Commission says, okay, you green flag, you're good to go. Or maybe the Commission wants more and says that they are operating in illegal countries. And this will be a big negative for Evolution AB. So that's maybe not a positive, that's a question mark. Reference to further legal risk, which may be about the California sweepstake lawsuit. Yeah, that's another question mark. Another question mark. Okay, this is their paragraphs, UK Gambling Commission, legal proceedings, so many uncertainties, right? Another sign, this is great research from Ali, by the way. Congratulations, Ali. I don't know if you're watching this video. Another sign of Evo's slowing expansion plans, the capex expected to stay under guidance, closer to 120 million instead of 140. Yes, we highlighted the same sentence here. Previous communicated, we expect that's a little bit too high. Okay. If you own this business outright, would you care more about the amount or the margin of profits? The EBITDA of this business has not grown since beginning of 2024. So now they are not growing EBITDA, they're actually declining EBITDA, and they do anything they can to push the margins, to sustain the margins. 2 quarters ago, as I told you before, they said, no, we don't care about margins, we're here to grow, to grow, to grow. It's a clear change in tone. This Q3 report is important, and this is why I'm making this video, to help you if you are investors in Evolution AB, because you are in front of a management team that is clearly changing its focus. Next question, what do you do in this situation? Are you happy with this situation? Are you happy with the change in tone? So the next part of this video will be the listening of the earnings calls. Let's see if we have more information here. Did I tell you anything I wanted? Oh no, I want to finish this part with some more value for you. I told you it will be the only video you need. Okay, so it was a couple of comments from me. Q3, still no growth, but now margins are shrinking. So a 7% hit in margins, if I remember correctly. So they maintain margins by firing people. So it's a cost control measure, and as a value investor, I love it, but they are supposed to be a growth company. So not sure of how to see this. Still no solution for cyber attacks. Asia is their cash cow. The biggest margins are in Asia. And if you don't grow your Asian market, and if the Asian market is declining, that's not a good sign. And they have no solution whatsoever. Europe needs to grow again on a quarter-over-quarter base. You have a growth rate of 1%. This is not enough. You need to grow again. Will they grow again? That's another question mark. You have so many question marks now. North America will be beneficial, but in a few years and with lower margins. Yeah, North America is a regulated market, so the margins will be lower than in Asia. So even if they win in North America, the margins will go down. The CEO is happy that energy is outperforming live. With such a low growth, very surprising to see the CEO celebrating this outperformance. No, it's just that your other segment is not growing anymore. I would love them to stop dividends and focus on buybacks. Unlikely to happen because it's a Swedish company. It's part of their culture. The dividends are not taxed over there. So for Swedish investors, it's the same if you receive a dividend or a buyback, because you can use the dividend proceeds to buy more shares. So in Sweden, for Swedish investors, they don't care. They don't pay taxes. I'm French. I pay taxes on my dividends. So I would hate to see dividends, okay? How much will they earn with their lawsuit with Playtech? The CEO had a chance to say something bullish about future earnings. Yeah, they just said that they unmasked Playtech. I mean, it was the opportunity to say something bullish for the CEO. So he says something bullish about something that is not true, but now he had the chance to say something very bullish and he says nothing. Very strange, very strange. I have so many question marks, and this is also the reason why I sold Evolution in Q1. I saw the signs that we were with the company that is not going to grow, and I saw other opportunities when the markets crashed I mean, you had the correction, right, during the tariff Trump drama in April. So I took the opportunity to sell out and buy things that went up. And so far, my questions have not been answered. Even more, I have more questions now. Can you grow really 1% in a regulated market? How high can the growth rate be in Europe now that you are navigating in only a regulated markets? How long will the cyber criminality last in Asian markets? Why are you not making why are you not doing a lot of buybacks right now? If you look at the report and the buybacks, you have repurchase of shares for this quarter of 187 million euros. They did less buybacks than last year. What was the stock price last year in Q3? So between July and August. Come on, between July here and August here, it was like 1,100. Now it's 600, 700, 800, and they do less buybacks, which is a big question mark for me. If you have a cheaper stock price, do more buybacks. Seems like this is not their focus. They are doing more, how can I say this? Decrease. They are doing more dividends than buybacks. This is very funny. Anyway, okay. Yeah, more dividends than buybacks. Look at this. The dividend line is 572 million euros spent in dividends, and for buybacks, 406 million euros. They are doing more dividends than buybacks. Welcome to the Swedish stock market. In the US, it will be inconceivable to have this. In the US, they will just slash the dividend and focus on buybacks. And I have plenty of examples of companies that have done this in the past. And I'm a shareholder on a few of these names, by the way. So I don't like this capital allocation thing. They clearly announced publicly that they are not a growth company anymore. They are reducing the capex, reducing the number of employees. They are focused on margin preservation, and they want to just wait, time it out, see if they can grow again in Asian markets, but without any solutions. So many uncertainties. I agree that now with the market pessimism, it could be the moment for a perfect bottom, because now the estimates, the outlook, the forecasts are so bad. The people are not expecting anything out of evolution, and now evolution is cheap if they can sustain this. So if they can grow again, evolution can be a multi-year buy right now. That will be the multi-year bottom. But I'm not so confident that they will rebound soon, because I see many struggles, many problems in Europe and in Asia. I still see no sign of recovery. Okay, so that was for my analysis for evolution. I will just go through the transcripts now, take a cup of tea, take a cup of coffee. I don't know how long this video will be, but I will just play this transcript. I hope the microphone will work nicely, so you can hear at the same time. Normally it should work. Well, we will see. And I will put some breaks. I will stop and comment on what is happening here. So, is it working?
Welcome to the evolution.
I told you, this is the only video you need to watch. You have the earnings, you have the reports, you have the Google Sheet, you have the transcripts. This is the video I wish I saw if when I was a shareholder, because you have all the information.
Q3 report 20.
Okay, let me skip.
Presentation. After that, I will conclude with an outlook, and then we will open up. This has been a recurring theme over the past quarters, but unfortunately this time it looks...
I'm not sure you can hear properly. Let me put the mic very in front of the speakers, like very near. Okay.
It's a bit worse. We were, as you remember, very cautiously optimistic about the remainder of the year in the last report, and there is really nothing that doesn't say that Q4 could be better. However, we are experiencing a lot of volatility, which makes the near-term performance hard to predict. At this stage, we want to be realistic and keep expectations low. So what are the main reasons behind the Asian development? First, it's the cybercrime activity that continues to hurt us. Every day and around the clock, we do everything that we can to mitigate the issues. However, some...
What are you doing? They say they do anything they can. Maybe legally they can't say anything. No, they can't say. They can't say what they are doing actually. So, can you really trust them? It's been so many quarters and no signs of recovery. They do anything they can to mitigate issues.
Measures do impact. We do everything that we can to mitigate the issues. However, some measures do impact also the end users, and this is what makes it tricky. At the point in time within the quarter, we did too much, causing loss in revenue. On the other hand, if we do too little, we lose to the pirates. Towards the end of the quarter, we found a better balance, but it's still volatile, and we do constant security updates to our core to increase protection. We will continue.
Maybe they will have to live with this new environment of balancing between growth and security. And maybe it will last for a few years if they don't find a proper solution.
To adapt the changes that are working and to fine-tune the methods that are working well and explore completely new actions as well. I ask for continued patience on this, but rest assured that is a top priority. Additionally, in Asia, the newly regulated market Philippines is volatile, which often is the case when operators and players adapt to the new framework. There are also other markets, such as India, that show signs of moving towards regulation, which creates a higher level of uncertainty than before. And to clarify, with showing signs, I mean that the current heated debate and quick and not widely acknowledged political decisions is something that we often see in the very beginning of potential regulation. Over a longer period of time, it will likely not be noticeable, but on a quarterly basis, it will cause variations like the one we see now. With the context of Asia in mind, let's look at the overall numbers. Net revenue came in at 507.1 million, corresponding to...
We've seen this, so let me skip it.
We saw the full effects of protective ring fencing measures in the second quarter, and this provided a new foundation for growth. Worth mentioning is also that we got recognition for our ring fencing from one of the largest regulators in Europe, where we were pointed out as one of the best B2B suppliers. I'm happy with the progress in Europe in this quarter. North America also performed decently, and Latin America is stronger than what we have seen earlier this year. Our live revenue declined by 3.4% to 431.7 million, while RNG increased by 4.2% to 75.5 million. It is actually the first time that RNG outperformed live in terms of growth. Our studios have worked hard, and especially No Limit City has performed great in this quarter.
Wonderful, so great, only growing 4%. They did 8% a couple of quarters ago, so it's not that fantastic.
To further strengthen our portfolio, we have launched a completely new brand, Sneaky Slots, from scratch, and it will be very exciting to follow that progress going forward. On live, growth is held back by Asia, but we continue to see good growth in the rest of the world. In both North America and Latin America, live is still in early days and gains considerable attention from operators and players alike.
Maybe, as Evolution shareholders, North America and Latin America are the master plan they have for the next 10 years. Maybe I am looking at bad metrics and Europe is dead, Asia is dead. Maybe if we look at the next 10, 15 years, everything would be concentrated in North America. That will be their core segment, regulated segments, clear leader. If we don't find the competition there, maybe yes. Maybe the key growth, maybe this video will not age well because in the next 10 years, only North America will matter. And it will be very funny. It's a very good sign. It's a green flag. This market will develop in North America and Evolution will be the leader in this market.
The opening of our new studio in Brazil has been a true success. On the game side, our highly anticipated ice fishing title has finally seen the light, and reception has been great across our market. It is mirroring the trend of faster and shorter forms of entertainment that are widely consumed in channels like TikTok and Reels. And it is indeed a much faster experience than, for example, Crazy Time. Another great thing is that expansion of ice fishing to other studios will be fast compared to the more massive games like Lightning Storm. With its success, we will definitely explore more opportunities in the speed game show arena going forward. To conclude the quarter, overall revenue is not where I want it to be. But when opening the lid, it's clear that the development comes from 1 out of 4 regions. The development in Europe, North America, and Latin America is overall good and also supports the margin, together with our clear focus on cost efficiency. Next slide, please. If we then move to our operational KPIs, consisting of headcount and game round index. On headcount, we are growing 4.2% on a year basis, but we have actually decreased 2.7% quarter-on-quarter.
Is this the first time they are firing people? No, second time I think. Second time. Ali is showing us this. Second time. So Q3 last year decline. Last quarter it was flat, and now biggest decline ever. Okay.
The slowdown is to some extent reflected in the revenue. We don't hire unless we grow, but looking at recruitment pace within a full year, there are sometimes fluctuation based on temporarily slower or high pace in recruitment. As we plan for more studio expansion over the next years, the long-term trend is that we will see continued increase in the number of new engineers. The game round index can be seen as a general indicator of activity throughout the network over time, as you know. And for an individual quarter, it can vary quite a lot and does not always correlate with the revenue development. However, as we also can see this quarter, it actually shows a decrease. Next slide, please. Innovation and quality will always be our signature when it comes to our game portfolio. And I am ever so proud of the continued delivery on our product roadmap for 2025. During the quarter, we released Ice Fishing, which I have already talked about, and also Dragon Tiger.
Yeah, we don't care about this. We don't care.
Will fill a gap between No Limit.
Who knows all their games if you are not a player? So we only care how many games and how successful they are. Showcase more.
I can promise that Tom and his team are ready to take entertainment to yet another level.
Which is true.
Next slide, please. Okay, let's look at the geographical breakdown. As already highlighted, I'm pleased to see that Europe grows quarter on quarter, with the revenue amounted to euro 182.2 million. We have talked a lot about ring fencing this year, and you probably remember that the effects on revenues were a bit larger than we had anticipated.
It's not referencing, it's ring fencing.
It is a price that we have to pay to stay ahead of the regulatory curve. But with that said, we have a new base to grow from, and despite the summer without any major sports events, development has been overall good. I should also mention the dialogue with the UK Gaming Commission, which continues, and we are yet to receive the conclusion of its review.
Okay.
What I believe is important to note is that we have been very cooperative and also responsive to various requirements that the Gaming Commission has put upon us.
This is great. I mean, this is very positive for the brand of Evolution, for their reputation. This is a very, very good positive sign for the company. And at the same time, Playtech has destroyed their reputation this week. So you have a discrepancy, you have a gap that is increasing, and that is a clear positive for Evolution. Ethically speaking, I mean, ethically, it's a sin company, it's about gambling, so you want to be laser focused on your reputation. You don't want to be accused of anything bad. So yeah, pretty good, I like it.
We still have to wait for the outcome, but I truly believe that we have the most sophisticated compliance framework among all providers targeting the UK. Moving on to Asia, where I have already provided the context for the bad development and a revenue decline of 9.6% quarter on quarter. Even though the market in Philippines has been volatile, our newly opened studio has been off to a great start. A while ago, there were some media noise on our studio partner losing its B2C license, but it has nothing to do with us or our studio. Everything is working as it should. We did, however, suffer some building damage in the 6.9 magnitude earthquake that struck Cebu in the beginning of October, but to our great relief, no employee was hurt and operations continued, even though that is secondary when people's lives are on the line. Next slide, please. On the contrary from Asia, North America is, thanks to its regulation, more predictable and stable. Quarter-on-quarter growth is modest, but on the positive side, the operators continue to invest heavily in live casino solutions and environments. Year-on-year growth is 14.5%. To meet the demand, we have launched our second live studio brand, Azugi, just around the end of the quarter, and we are planning to open a second studio in Michigan during the first half of 2026. I would also like to highlight that we, after the quarter, have launched Crazy Time in Connecticut. Great, very good. Also, when speaking on North America, I would like to mention something on sweepstakes, as it has been a topic of discussion during the quarter. Sweepstakes is a popular product in the US, and we offer it in states where it's not prohibited or in any way under regulatory scrutiny. Sweepstakes is a very small part of our total revenue, but we believe it has some potential, and as you know, as the market leader, we want to offer a great variety of content. In the quarter, a city attorney in Los Angeles made a personal interpretation of the California law, and as our strategy is that we don't offer sweepstakes where there are regulatory uncertainties, we pull it from the market. Simple as that. I'm also quite certain that you will ask us about the completion of the Galaxy Gaming acquisition. We are still awaiting some regulatory approvals, but believe me, we believe we'll be able to close the transaction before year end. However, it's a regulatory process. It's not completely in our hands. Moving on to Latin America, where growth is picking up with 6.4% year on year and 5.9% quarter on quarter. The new regulation in Brazil seems to be done with its initial teething problems, and operator and players are becoming more active. Our new studio in Sao Paulo, Brazil has developed nicely during the quarter and will expand as we move forward. Now I will hand over to Joakim for a closer look at our financials. Next slide, please.
Great, thank you.
Well, you already know the financials. Let me scroll down a little bit to see if you have additional information. I don't want to waste your time. Regulated revenue, no. EBITDA margin declining, no. From the chart, our growth has clearly tapered off and become negative. We are not happy. We can assure you that we are doing whatever we can to reverse that trend. Yeah, I know, guys, but good luck. Next slide, number of the slide. Net revenue is down. Secondly, the expenses are up. But more importantly, down from last quarter. Oh, costs, expenses are down 3% quarter over quarter. Okay, pretty good.
We are not only trying to work smarter and be more efficient, optimizing how we use our studios and tables, but we are also taking some broad-based cost-cutting measures, which will continue for the rest of the year and into 2026.
They plan to fire more people in 2026. Global, broad-based, global cost-cutting measures. If they can stabilize revenue, stabilize costs, or even lower costs because they fire some people, maybe earnings will go up in 2026. This is good. We did not have this in the report.
We are not only trying to work. Thirdly, our operating profit amounted to 296.6 million in the third quarter. And finally, EPS after dilution amounted to 1.25. To be noted, the profit for 2024 includes 59.7 million of other operating revenue related to reversal of an earnout liability. So to make it comparable with this year, you should probably adjust for that.
And maybe I'm the only one doing this line. If you look at the head, even the Swedish press releases, the headlines, financial articles from Swedish media are mentioning an earnings per share down of 20%. They never talk about this adjustment. So we were the first one.
Let's move on to the next slide, where I'm going to show you the development of our cash flow.
Yep.
First, to the right, our capital expenditures. And as can be seen in the graph, we are down quarter on quarter. The total capex related to tangible and intangible assets of 29.8 million. With that, we are likely going to be slightly lower than the full year forecast of 140 million that we announced in the beginning of the year. If we then look left, our operating cash flow after investments amounted to 342.1 million in the quarter, which corresponds to a cash conversion of 83%. With that, we are back on track after a seasonally and unusually weak second quarter. The change in working capital was positive 35.2 million this quarter, meaning a swing back from the weaker number last quarter, which is good and in line with our expectations. Then finally, for me, some brief comments on our financial position on the next page. On this page, you will find our summary of the balance sheet for the third quarter compared to what it looked like at the end of last year. The main items that I usually highlight, which are all signs of our financial strength, are the value of the bond portfolio of 103.2 million, our total cash.
They have a balance sheet of 5 billion euros in assets. They have cash and cash equivalent. No, sorry. They have cash of 100 million. No, that's this one. Cash and cash equivalent of 600 million euros and a bond portfolio of 100 million euros. Why is the bond portfolio so small? Yes, you have to pay this as dividends, but this is so small. I mean, at this point, you don't have a bond portfolio. Do more buybacks. Very strange capital allocation. Why do you keep your bond portfolio instead of doing a buyback? I mean, your bond portfolio will invest in bonds. You will get 3-4%, and your earnings yield is 8 or 9%. So mathematically speaking, if they believe they are cheap, if they believe they want to do buybacks the real way, they should cut the bond portfolio and do more buybacks. Another sign that this is a Swedish company and not a US-based company. We have talked about this extensively inside my coaching program, how to do buybacks and dividends the smart way. They have a complete masterclass on how do you know if a company is good about capital allocation, doing buybacks the right way when it's cheap, dividends or not, when should you do dividends, when should you do buybacks. My students have a complete masterclass on this, and now they understand how everything is done. So if you don't understand this, well, you have the first link in my description to be inside my coaching program so you can learn the good way. But yeah, very strange to have these capital allocation decisions. I'm French, so the French companies do this also. This is typically European.
Balance that amounted to 656.4 million and the equity position at the end of the quarter, which amounted to 3.8 billion. We have continued with the buybacks in the third quarter, and in total we invested 187 million and bought back 2.5 million shares.
Do more.
In total, we have now used 406.5 million of this year's mandate from the board of 500 million. And following the release of the Q3 report today, we'll be back in the market with an aim to use the full mandate before the year ends.
Okay, you have 100 million euros in buyback remaining. And this quarter, they did almost 200 million euros. I mean, they can do it this month, October, November. They can completely end the buyback program and start a new one. This is maybe what they will do.
With that, I will hand it back to Martin for his closing remarks.
Wow, good luck, Martin, for the Q&A. It will be a difficult time for you. Oh, wow.
Thank you, Joachim. So let's summarize the quarter and then move to the Q&A. Performance in Asia was bad and left a negative impact on the group revenues as a total. But with that said, the rest of the world is doing decent to good, and we are determined to get Asia back on track. I understand that it causes some frustration, especially since we actually saw some signs of improvement in the second quarter.
True.
And believe me, I'm frustrated too. I can only repeat that it requires patience while being a top priority. I'm happy to see that the margin has improved compared to the first half of the year, and we don't see any reason why for it not to stay within our target range of 66 to 68% for the remainder of the year. Cost efficiency is something that I feel strongly about, as it's part of our roots as an entrepreneurial company. We never spend a penny unless it provides value to the business in terms of growth. At this presentation...
Strange wording when 6 months ago during Q1 they put a lot of emphasis on growth that was superior to margins. Strange wording here.
We never spend a penny unless it provides value to the business in terms of growth. As this presentation is about the financial performance in Q3, we don't have a separate slide on the movements in the ongoing defamation litigation in the US. We have for 4 years finally received information on who was behind the false report. This process will continue in court, and I will not make any comments about its future development. What I can say is that we believe in fair competition, where innovation and excellent operations count.
Maybe they don't have to say anything about this lawsuit, legally speaking. Maybe they may be attacked if they say something. Maybe this is why the CEO has not said anything positive about this outlook. But you will have a fine. They will receive some money from Playtech.
When a competitor decides not to play by these rules, it hurts not only us, but the industry as a whole.
Sure.
With that said, With a little bit more than 2 months left of 2025, we will continue to run, adapt, and improve. When we summarize the year from a financial perspective, it will have been a bumpy ride, but from an operational perspective, a very strong and important period for Evolution.
Yeah, I mean, that is the moment you shift from unregulated markets to regulated markets. So it's a big transition year for them. And I bought Evolution thinking that these problems were temporary. And in 1 year, the management team was competent enough to do this transition nicely. Turns out it's much tougher than expected. And I think many shareholders of this company are feeling the same. You expect these problems to be temporary, but they are not temporary. Next question, do you exit your position? Do you hold or you double down? It depends on your risk tolerance. It depends on your framework. It depends on what you really want in the stock market. Some people have a certain threshold for pain. Some people look for certain metrics. I've made a video about this when I sold. The lack of growth and the lack of visibility and the lack of honesty from the management prevented me from being a long-term shareholder. Literally, investing in Evolution was a black box. They didn't provide any guidance, any issue when it comes to the cyber attacks. And Asian market is the most important market for them. And it is under attack and the management is not doing anything. No growth whatsoever. And not explaining anything to us shareholders. I didn't like this at all. It's about culture of the management. I want trustworthiness, I want openness, and I want a lot of information, a lot of integrity. And I didn't have this for Evolution. So this is also the reason why I sold. Depends on you what you want. You want to be a shareholder of which company?
With that, we open up for questions. Next slide.
If you wish to ask a question, please dial pound key 5 on your telephone keypad to enter the queue. If you wish to withdraw your question, please dial pound key 6 on your telephone keypad. The next question comes from Martin Arnold from DNB Carnegie. Please go ahead.
Hi, Martin and Joachim.
Hello.
My first question is on if we could discuss the Asia situation just a little bit more. I think you mentioned it remains volatile, and you, of course, the ambition is to get it back on track. And my question would be, are there any signs that it has bottomed out? Because the countermeasurements, that's in your control, right? So if you have been too stringent, you can adapt. But the regulatory situation and the effects from that is not in your hands. Is that the correct interpretation?
We are doing everything we can with the countermeasures, and as I said, we did a little bit too much, and we have to do a little bit less, and we'll find the balance. And I think that we are on to it, and we do the right things.
Zero information, zero concrete information was given to the analyst. What are you doing? Can you trust somebody that says, yeah, we're doing right, but we did too much, so we have to back down? I need more substance, more concrete information about what they are actually doing.
And it's also natural that there will be a situation where you do a little bit too much, because otherwise you won't know where the borders are. When it comes to the dynamic and regulatory situation in the region, there's a lot of countries, and right now there's volatility in some of the regions, some of the countries, and that affects us as well. I can't predict much more than that.
And my second question would be, first on Europe, return to growth quarter on quarter there. Is that because players finding their way back after the ring fencing through regulated alternatives, do you think?
That's a very good question. And I believe that players in some markets find their way back and want to play at regulated and good content. So that's probably part of it. And we see good development in total. I'm actually happy with the development in Europe.
Okay, and final question is just on investments. I mean, is there any investment that you could accelerate to improve this current situation in Asia?
Great question here.
You've always commented that you would prioritize growth over margins.
It's not, if I could throw more money at the problem and I would get a quicker solution, I would do that. I don't see that it's a money issue. We invest and we put the resources, the top-notch resource in the world to do whatever we can. And there's actually, don't quote me on that, please, but there's no limitation when it comes to that money. We put revenue and market share before cost, but we also need to adapt to the situation we have. So that's what we're doing right now.
Yeah, it's a tough job. I am rooting for them and defending the management team. It's a very difficult problem they have here in Asia. I'm not saying they are bad or incompetent at all. I'm just saying it's a very difficult problem that will last for a couple of quarters. He is literally saying it's not a matter of money. We cannot hire a lot of cyber defense guys and do the work. It's too big of a problem. They don't know how to fix this problem properly, in a good way, in a long-term way. Which means they don't have a solution. Which means the next quarter will unlikely to see some growth. They don't know when the bottom will be for Asia.
Perfect. Thank you, guys.
Thank you.
The next question comes from Ed Young from Morgan Stanley. Please go ahead.
Good morning. My first question's on North America.
Good morning.
It's showing the best growth. Good morning. It's showing the best growth across your geographies, but it's still behind market growth. Could you give us an update on the drivers there? What's going well, what's going less well? And do you expect any material change in the growth rate into next year? The second is on Asia. It sounds like it's a reasonable conclusion from your comments around countermeasures, Martin. You may never be able to fully deal with these issues. So put another way, should we be rebasing fundamentally our Asia revenue and growth expectations, or on what sort of timeline do you have optimism over market growth and market share gains in Asia? And then finally, I'll ask it, I appreciate giving you a very final comment you may not want to answer, but what are you looking for as an outcome from your legal action? Are you seeking maximum financial damages? Are you expecting regulators to review your competitors' license suitability? What are you looking for? And what sort of timeline do you expect this to play out? Thanks.
Great.
Thanks, I got it. When it comes to growth in US, Live is doing really well. We have a couple of fluctuations, maybe didn't have the best quarter when it comes to RNG. There are little bit fluctuations over the quarters. I'm happy with the development. I look forward to the future in US. That's the situation in US. When it comes to Asia, to address this problem, it's technically difficult, it's very advanced, and we're doing it, and we're tuning and we're finding. My belief is over time that we will find the right balance and the right solutions and continuously enhance and protect our product to make it even better. So in the longer perspective, I look at a very good situation in the Asian market. Now, I don't have any, I can't share any sort of time frame on that right now. I'm a bit more cautious with that. When it comes to the outcome of the litigation process in US, I look for fairness, justice. I think that it's horrible to do what has happened to us. Someone is hiding between layers of companies and hiding their true identity and writing a number of false statements in the report to us. It's unfair. We are protecting the shareholder value of Evolution, the company as such, defending ourselves from our employees, and the first thing that we look for is some kind of justice, I would say.
Good answer. Good answer. Well, but the employees, you had a few stories in the Georgian employee base that they didn't treat their employees right. But yeah, I get the point. You don't want to inflict too much damage. You want justice because you want your industry to look good and to be professional. You are not children. It's something that a kid can do, to just attack a competitor like this. We are not children, we want to be adults, and we want to be professional. It's a very good answer.
Okay, thank you.
The next question comes from Ben Shelley from UBS. Please go ahead.
Hi, good morning, and thank you for taking my questions.
Good morning.
Yes, good morning. I've got three, if that's okay. On Asia, could you talk a bit more about the developments in India in more detail? What exactly is happening on the ground, and how should we expect this to develop over the coming quarters? My second question is on North America. Could you talk more about your sweepstake exposure in the US and how meaningful that is versus your North American revenues? And three, I was wondering if you had any early thoughts on capital allocation for 2026. Do you think 500 million euros is the right starting point for share buyback expectations for next year? Thanks very much.
So The situation on the market in Asia is a lot of different countries. We point out Philippines as very volatile right now, and there's things happening in India, but there's also other countries that are fluctuating and things are happening there as well. India is a large country. There are regions that have portions regulated when it comes to sports. There's a desire in some regions to regulate. Now there are suggestions on a sort of federal level to take a few steps towards blocking online gaming. These type of movements we often see when there is talks and happenings about regulation. It opens up for different routes forward. It could go into regulation, it could settle down, or it could go somewhere else. We can't speculate on that. We just see that it's affecting us to a certain level right now. North America, I think that you asked about sweepstakes, and sweepstakes is we provide to the sweepstakes market where there are no regulatory problems or any legal problems, and we're very lenient. We talk to a regulator, and if there would be a letter or someone, a regulator or an authority stating, don't do it here, we would immediately go away. US have a history of riverboats that from the beginning traveled on the river, then went only ashore, and they had to have the engine running, and then they didn't have to, and then it was on pillar. These type of movements have been, prediction gaming could be one of these, but these type of movements have been there, and we want to supply to them as long as there is no regulatory or authority saying no. So we did that. In the case of California, it's a state attorney in Los Angeles that made a personal lawsuit, and that's okay. And immediately when that happened, we withdraw from that. So that if that's what you want, then we withdraw from that. So that's the sweepstakes situation. Capital allocation, I don't want to comment on that. It's in the end of the day an EGM decision and a board proposal. We are acting on the capital allocation that we have, and you also have the capital policy and that we published last year, and I'm sure that the board will continue following that.
Yeah, basically what they said last year was we will continue to pay 50% of our cash flow as dividends, and the rest will be a little bit of capex, and the rest will be buybacks. No major acquisitions, small bolt-on acquisitions, but the rest buybacks. So I'm strongly forecasting they will continue another buyback program of 500 million euros when it finishes.
Thanks very much.
The next question comes from Praveen Gondhale from Barclays. Please go ahead.
Hi, thanks for taking my questions. Firstly, on Asia cyber attacks. So yeah, we are seeing that it sort of continues to be a drag on your performance, but do you see any risk of spreading these cyber attacks to your other markets, like Latin America, where black market continues to be big? And then in Europe, can you just give us a sense that between live and RNG, which have been the key drivers of your European growth on sequential basis, and any sort of steer on how do you expect European revenues to grow from here? Thanks.
The protection measures that we add to our core is valid for the whole core, meaning supply to all parts of the world. So one of the upsides in doing what we're doing now with advanced technology and AI and everything is that it also protects our core in other markets and all over the world. So I would almost say that it becomes a competitive advantage where we increase the gap to competition, and eventually we make it so hard to steal our product. So if you want to steal the product, you have to go to someone else. So it's protecting everything. So any measure we take in Asia will be accommodated in all of the core. So that's
Sure, good answer. Good. It's true. If they find a solution to these cyber attacks, they will be much more in control of their games compared to competitors, which is true. Imagine next year they solve this issue. Well, it increases the moat that Evolution has. It's true. This is very true.
That's that. And when it comes to the split in the growth, I mean, we're doing very well right now, momentarily very well, maybe not even showing the figures in the right way, but when it comes to RNG, we're happy with the development. No Limit City is delivering great games.
The RNG segment has never grown more than 10% in years.
And of course, it's contributing in a good way to total.
And they've been saying we're doing great things, but we don't see that in the numbers yet. They've been saying this for quarters and quarters and quarters. They have a growth rate of 5, 6, 7%. now 4%. And every time they say, we're doing great, but the numbers don't show it. So I'm very skeptical. When will the nice growth rates come?
Revenue in Europe. Now, it's still a smaller part, so live is the big part, so don't forget that. I mean,
Where am I?
It doesn't matter if it does tremendously well, it doesn't affect the figures that much.
Thank you.
Thank you.
The next question comes from Monique Pollard from Citi. Please go ahead.
Morning, everyone. Thank you for taking my question. Three from me, if I can, as well. The first was just on the regulated revenue increase we saw in the quarter, and you talk about the sort of direction of travel. I'm just trying to understand whether that increase in the regulated revenues is driven by the fact that North America and regulated territories performing better than Asia, or whether there were some new markets that regulated in the quarter that also added to that progression. The second question was just on the UK Gambling Commission review. You mentioned in the presentation that there's no new news, but also in the report you say you're expecting a conclusion by the end of the year. So just wondered what gives you confidence in that timeline of end of year, please. And then the final question is in relation to the news we had a couple of days ago on Playtech Black Cube. I appreciate you don't want to get into the details of the types of damages being sought, etc. But it would be really helpful if you could give us some indication of how you look to assess the damages. So, is the starting point for assessing damages based on market cap movements on the day that these bits of news became public, or are there other sort of processes you use when you're thinking about the damages that have been caused by these reports?
These are three great questions, by the way, and this one is great. And I don't know what the answer will be from the CEO, but if the CEO had said something very bullish, you would have seen a spike in this minute, boom, a huge spike for Evolution stock. So now I'm guessing he didn't say much because we don't see this spike. Sometimes in 1 minute, the CEO says something on the call and boom, you have a big spike in the stock price. So I'm 100% sure he didn't say something numbers oriented. He didn't share a number. He must have said, yeah, we'll take action. It will be big, but I don't know how much. This is, maybe he will be saying this.
Thank you.
The regulatory percentage, 46% in the quarter, good development, we're moving in that direction. That's nice. That comes out of course, that the regulated markets are outperforming the non-regulated, and it's affected, of course, by the situation in Asia. So more and more gets to be...
That's a bad answer. Meaning, it's not because the regulated markets perform well that the share of regulated revenue is going up. It's because the share of unregulated market is going down that you have this change in percentage. Okay.
Regulated, and I might remind you that as soon as it tips over to 50%, and if the revenue grows equally, it will continue to increase more and more. So we're in a good position with that. When it comes to the UK Gaming Commission timeline, unfortunately, I don't have any other information than what I've... It's in the hands of the regulator, and our estimation is that it will be by the end of this year. I have no further...
Okay, so the guideline is purely arbitrary like this. So maybe it will be at the beginning of next year. Fair enough, okay. It changes nothing of the story.
Further information, that's what it is. For me, when it comes to the Playtech situation, I mean, I would say about the same things all over again, but when someone behaves in that way, hides during 4 years doing this type of action with that type of company that the Black Cube is using, Judah as a PR company, it takes a bit away from my belief in humanity and in fair play and in ethics and moral. Exactly how we will assess the damages, that's a later question, but it's a severe amount.
How can you calculate the amounts, the fines that we have to pay? Do we really have to account for the market cap that has been lost? No, because it's a reputational damage, so it's more than this. Can they pay what? $1 billion? What is the market cap of Playtech? I mean, maybe they can put them bankrupt if the damages are too big. The market cap is $1 billion for Playtech. And this is a company with no additional cash on their balance sheet, and they have how much of net income every year? They have net income of $200 million, $200 million in net income. The damages, if they are too big, they can put Playtech in bankruptcy. $1 billion of fines? I'm just guesstimating here. I don't know how to judge the amount of dollars they will have to pay. $200 million, some fine, some disclosures. It's a big question mark, and apparently the CEO doesn't know. It's something about the lawyers, right? But yeah, he didn't give any information to analysts.
The next question comes from Adrian de Saint Hilaire from Bank of America. Please go ahead.
Hello, good morning, everyone. Thanks for taking the questions. Hello. So first of all, on Asia, again, it's been a volatile region now for a while. I'm just curious, high level, if there is a point where you might draw a line in your commitment towards that region and refocus towards other markets. Secondly, you touched on this, but cost per employee was down quarter on quarter. Can you explain a bit what's going on there and the sustainability of that? And then, sorry, this is a bit like technical perhaps, but there's been quite a switch between current liabilities and other non-current liabilities in the quarter. Can you explain a bit what's going on there, please?
What? There was a decline in employee personnel. I see 6%. And current liability, non-current liability. Here you have a bit of a change. Not sure what they mean here.
Okay, I will start with the first two, and then I will, with warmth, hand over the last one to Joachim. So we look forward, and we are engaged, and we actually think it's intriguing, even if it's tough, to find a solution to protect our product in Asia. But I think it will become more and more important also for other markets if we look in a longer time perspective. So we don't have any line that we will draw against Asia. We'll continue to fight that, and as I stated before, it's not about money, it's not the cost that is the problem. It's to find the real good solutions and the level for that. When it comes to cost per employee and the cost base, we have talked about all since actually July 2024, where we had the strike in Georgia and that situation and the cost mix, and we had to shift a little bit, so we had an unfavorable cost mix. Now we're starting to be able to shift that, which is what we have talked about during the quarters, that we need to have a better and favorable cost mix. It's not like we're cutting delivery right now. We are putting the delivery in the studios, which are good. So that's the reason why we come to that. And then I will hand over to you again.
Yeah, of course. Sorry, the balance sheet question. It's simply a reclassification of earn-out liabilities that we have moved from being long-term to short-term in this quarter, as they indeed are for shorter than a year. I think that's the one that you are referring to. Well spotted, by the way.
Thank you.
The next question comes from Raymond Kay from Nordea. Please go ahead.
Hi, good morning. A couple of questions from me. I'll take them one by one, starting with, no surprise, maybe Asia as well. Compared to, say, Q2, how much of the decline here that we saw in Q3 would you say is due to cyber attacks, and how much is from regulations and changes in geographies like Philippines and India, would you estimate?
I don't split that out. There are sort of three components in the situation. One is cyber attacks. And the cyber attacks is, of course, the constant level of it, but also our action that was a little bit too tough, and then we had to retract. And then there is the instability in the region when it comes to regulatory situation. And here we point out India and Philippines as two of those, but there are also others. So unfortunately, I don't want to go into exactly where in detail, and it's also very hard to see that.
Got it. And then regarding sort of the regulatory situation in not just Philippines and India, I understand it, but how many months of impact we just made that we have seen here in Q3? If we compare it sort of to ring fencing back in Q1, do we have the full effect? How much should we expect ahead? It would be really helpful to understand.
I understand. I assume that you're talking about Asia, right?
Yeah, that's right.
So I think that there is a difference between the situation in Europe and Asia, so to speak, but the ring fencing has a little bit of a tail. I think that in Asia, the situation is more momentarily, okay, this is where we are right now, and we need to take it from there. and then we need to see that we do the right things in the coming quarter and see to find the balance.
Got it. And then on North America, your sequential sales growth was flat here in Q3. You had momentum going into Q2, where it added 2 million euros on top line now. How much of the trend here in Q3 would you say is due to withdrawing from California and stake? Is it the majority here, or is there other explanations?
I wouldn't say that affects significantly.
Which means the North American segment is slowing down.
And finally, just one more if I may. Could you maybe help us get a better understanding of how you intend to reach your margin target with the revenue we see here in Q2? How much should come from, say, revenue growth? How much should come from additional cost savings? Is it sort of equal, or how should we think about that?
No, if I jump in and take that, I mean, in Q3, clearly we are within, right, as a separate quarter, 66.4 this quarter, and also, as we said, year to date is 66.0. So if we just repeat what we now delivered in Q3, we are there, right? So it doesn't take a lot to make it for the full year, and we are quite confident that we will make it for the full year.
The next question comes from Rasmus Engberg from Kepler Cheuvreux. Please go ahead.
Thanks for taking my question. Do you anticipate that India could potentially have an impact also in the fourth quarter? So that's the first question.
Can't comment on that. I don't. I look at it. I look at Asia right now, and I'm cautious when I make any predictions due to the situation that it's so volatile.
Yeah, fair enough. Can you explain the next step in your legal battle?
Wow, it's a very tough job to be the CEO of a public company. I would not like to be in the shoes of the CEOs right now. I don't want this position at all.
With regards to Playtech, what happens next? Could you also...
He just has a lot of hard questions. If he says something publicly, it will be quoted against him if he fails. So you have to be very cautious what you say publicly.
Perhaps give us an indication of what the run rate of costs is that you're incurring, if possible.
The first question I can answer. It's like the thing that happened this week is actually it's not a action that affects Evolution in any way. When we initiated the litigation, it was with a fake name, Joe Rowe, and that was Playtech, but we just didn't know that it was Playtech. So right now that is just exchanged for Playtech because we finally got the name. So that's what happened. And then we gave you to the market all the information we had relating to that, and that's it. So from our perspective, and the next thing is that there are a number of depositions and potential information that should be shared, and the legal process will continue, just like it have been. When it relates to the cost, it's naturally very expensive to do this type of exercises. We do it to protect the shareholders. We do it, the value for the shareholders. We do it to protect the company. We think it's unfair. It's unheard of. It's a behavior that we just don't understand. Now we won't split it out right now. Maybe in the future to come we will look into it. But right now we don't comment on the exact cost.
That would be very funny that for 2026 you have a new line in the income statement called legal costs, and because they have to hire lawyers to defend themselves, right? So, and that would be very funny to have a big line, a big cost when it comes to the legal cost, and Playtech is also having this big line and dragging the lawsuit to not pay the fine. And it would be very funny that this is the reason, this legal cost line, where they don't beat their margin estimates. It would be very funny that their defense would be the cause of them not reaching their guidance for margins. It has happened for some companies in the past. A company I know very well, Texas Pacific Land, TPL, in 2023, their biggest cost, the biggest line was legal actions, legal costs, lawyers. So it can be a couple of millions of dollars, a couple of millions of euros for Evolution AB. It would be very funny. I don't wish them that, but maybe Playtech can play unfair here and drag things down for years and years, and Evolution will have to pay lawyers for years and years, and earnings will go down because that's an additional cost. Yeah, they are in a very tricky situation.
Fair enough.
The next question comes from Jack Cummings from Berenberg. Please go ahead.
Good morning, everyone. Two questions, please. The first is just on the ring fencing in Europe. Is there any more that you still have to do, or is all of the European ring fencing now completed? And then just on my second question, appreciate it's a little bit early than when you normally talk about full year 26, but based upon your comments on cost, shipping cost mix, would you expect to see EBITDA margins expand in full year 26 on full year 25? Thank you.
When I look at ring fencing, I think that we're in a very good position right now in Europe. Things can happen in both directions.
This answer is a no answer.
But I don't know any other actions that are ahead of us right now. When it comes to EBITDA margin, we have full focus on 2025 to deliver the 66 to 68%. And we look forward to do that. And then I assume somewhere when we release the Q1 report, or the Q4 report, sorry for that, I'm a little bit ahead of the curve, then we will guide you for 2026. Reasonable mix is positive. Thank you. Thank you.
Next question comes from Karen Puri from JP Morgan. Please go ahead.
Hi, most of my questions are actually answered. Just one on Europe, I guess. Wondering how should we be thinking about a more normalized growth profile in 26 onwards once you sort of lapped the ring fencing adjustments. If you could share a bit on that, would be great. Thank you.
The answer to that, I don't guide on the future, but historically over the time, Europe is the most mature market, and we had a pace of growing 9-10%, quite consistently over a number of years. That's the best knowledge we have of the situation, and right now we're ring fenced, and we're starting to see a little bit of growth from that.
So before the regulatory change, they were growing 9-10%. They did more than this, but anyway, 19%. And now they have more pressures, so they will likely grow less than 9 or 10%. This is what you can conclude from this paragraph.
The next question comes from Andrew Tam from Rothschild & Co Redburn. Please go ahead.
Good morning, both. Just one question from me. Can I just clarify just your position on India? You talk about the regulatory volatility there. I just wanted to just fully understand what that means. Obviously, you've seen in recent weeks one of your largest customers globally decide to exit that market entirely with the real money gambling bans. Are you saying that is a market that you would look to ring fence as well, should you get some more regulatory clarity going the other way against you?
Ring fencing has to be done in relation to regulation and what is there. We are watching it closely right now, and there are volatility in India, as you understand. At the time, if there will be ring fencing, that will be later down the road.
Okay, so no plans for ring fence in the immediate future in India?
We're watching it carefully right now and see what would be there.
The next question comes from Martin Arnold from DNB Carnegie. Please go ahead.
Yeah, I just had a follow-up question on RNG actually, because I saw that you had growth improvement there. And could you just say, is it because No Limit City has a strong edge in the market, or do you see the market for RNG has improved?
We are doing better and better, slowly, bit by bit, when it comes to our RNG offering.
Okay.
Thank you. Thank you.
Okay. No more
there
questions.
are no more questions at this time, so I hand the conference back to the speakers for any closing comments.
Thank you very much for participating, listening to us. I really look forward to see you in a quarter. Thank you.
Oh, that's it. Okay. Well, I hope you liked it, guys. A lot of questions were not answered. They want to be vague because everything will be quoted against them. So I understand their position. I understand they want to play cautious, and a lot of questions are shared with you, I suppose. Asia, ring fencing. Now we have more countries that are being regulated. What about the lawsuit? How will it play out? And you have so many question marks. So yeah, I hope you like this video, guys. It's a format that I think I've never tried on my channel, to do everything in one video. Don't forget to leave a like, subscribe. I hope it was helpful to you shareholder or you potential shareholder of Evolution AB. Tell me if you like this format. Don't forget to subscribe. And yeah, I'll see you in another video. Thank you for watching. Bye-bye. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a video, a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.